What's going on? What's going on? Welcome back. Welcome back to another episode of Take Profit Tuesdays. And I want to thank you guys for coming to today's episode. This is your host, Levon Stewart, founder of Vanya Effects. And as we like to always do with each and every single episode, guys, this is not financial advice. The markets are very volatile. If you are seeking to make money in the markets, please seek a financial advisor. A financial advisor who's someone licensed, someone who could, take a risk upon themselves and make them more knowledgeable, being that they have a whole financial institution standing back behind them. And that you would, such as the trader, investor, who's willing to take upon those commissions, fees, and all those miscellaneous things, to help manage your funds, right? So again, this is not financial advice. But anyways, if you're coming into the video, the stream, like it, comment it, subscribe. We're still growing. Guys, I'm feeling nice today. Just got back from the gym, ate, and I was like, yo, I'm really excited to do today's live stream, honestly, because in the land where people are losing money, there's people gaining money. When people are gaining money, there's people losing money. So which side are you going to be on, right? We always want to be on the winning side, where we're being confident, or we're practicing the four pillars. These are what we stand on. This is what keeps us afloat. This is the foundation. And again, the four pillars is capital, strategy, psychology, and risk management. But to put in proper order now, it's going to be capital, strategy, risk management, and then psychology, guys. And again, this is what we teach in the group. If you want one-on-one training, contact me directly in the comments. Email address, I'll try to put in the description of this video or future videos. You can reach my Instagram. You can also follow my other channel where I do reactions, so on and so forth. But let's stay on topic. Yes, we also have a crypto management as well. So if that's something you might be interested, you can keep your cryptos offline. Not on any of the exchanges. Not on like a hot wallet, which is a wallet that's connected to internet. You would like to keep it onto a wallet that is not connected to the internet, which is a cold wallet. And we can help you with that, and also manage it. We're looking at like different staking projects and so on and so forth. So we got a lot going on, guys. You really want to be involved in the beginning stage of these things, because when things are cheap, those are the best time to get in. You hold on for a while and you reap the returns. That's the life of trading, guys. It's the four pillars. So we gotta stand on it. So again, if you're just not coming into the stream, support the channel. Again, support the channel. All right, so let's jump into it. So again, we got a lot to go through. So as far as last week's or this, preview of what happened to markets, we got a rally, guys. That's actually really good. So let me pull up the Robinhood account. Like I said, this is the team account. Again, if you're just not joining, if this is your first time watching one of these videos, we're doing a team, a group, a collective trading, just buying the S&P at lows and see it for long-term gains. Again, if you guys want to jump in around the same time as I'll go in, you could jump in. Again, we do these videos on a weekly basis. So being able to get in 1 week and miss another week, and being able to get into another week, it's possible. It's not an everyday kind of thing. Again, if you're a swing trader now, this is definitely the field you want to, these are the kind of videos you want to do, because again, we're focused on long-term gains, right? We're not focused on quick wins and quick losses. These are almost guaranteed wins or guaranteed profits. And again, guys, just to reiterate, this is not financial advice. If you are seeking an advisor, please, look for an advisor in your local area, someone who's licensed, someone who could actually, manage your funds and also have an institution back behind them, as well as, collecting their fees and commissions for, helping manage your funds. But if you're, the kind of person who wants to, help manage your funds, you're in the right channel, guys. All right, so I have the account pulled up right now. We are, give me 1 second, guys. Hang tight, hang tight, hang tight. Right now we are just trying to figure something out, guys. Sorry, hang tight. Right now we're about 7.82% down. So we're down. Yeah, so we got about, I'll disclose it. We about to have about a total of $100 invested, which is not a lot of money, guys. Again, we're gonna try to work towards the option trading account, and right now we're only down 7%, which is not that bad, to be honest. It could be a lot more worse. So if we were to just only buy out the first time we took a trade, and again, guys, I've been doing the dollar cost averaging method. Let's see how much it would be if I just that one-time buy held it to where we are now. Wow, that's 14% drawdown. We're only at half that. And why? Because I've been buying the lows, guys. And guess what? I might buy some more. I'm not 100% sure, to tell you the truth. But yeah, right now, there's a lot of things going on. I could say a bunch of things, and I'll say it in just 1 second. So as we all know, the feds, they have taken upon themselves since February of this year, and they noticed that because of the stimulus and because of all the circulation of money going around, it has caused prices of goods to increase. And again, guys, we're still in the point of this whole pandemic where there was also a great resignation. So a lot of people they're, leaving their jobs. So now a lot of people they're dependent on certain incomes, such as their stocks, their bonds, their pensions, their so on and so forth. So which causes more money to be in the supply, which causes more goods and services to go up. So what that leaves us is a lot of companies now, they're even in the transition of hiring more laborers or talent, because again, we need people to be in these positions, because a whole, let's say 1/3 of the working force, and again, this is not specific numbers, these are just numbers I'm throwing in my head. Let's say 1/3 of the working force resigned or retired, and we need those positions to be replenished. There's going to be a lot of promotions. There's going to be a lot of hirees, trainees, so on and so forth. So now the best thing to do is, as a investor now, look for perfect times to buy, because everything's going to restructure and come back up. Now we're at the lows. So again, if you don't have the capital ready, start finding another job, sell something and start building that capital, because right now we're almost at a really pivotal point, right? And again, we're not gonna do any forex today. I might talk a little bit about Bitcoin. I want to keep this stream really relatively short, because again, not a lot of things went on this week. It's been relatively quiet. But yeah, the Feds, like I said, they're still in talks of increasing rate hikes, and there's still talks of, which we will get into in these two articles that we're going to talk about. A lot of things going on. So let's look at the weekly. So this drawdown, and the one thing I do want to just take a step back and think. when the pandemic happened, guys, we had about one. No, let's go with the first one. One, two, three, four. About a whole month of drawdown. The whole February to March. Between those 2 months, significant volatility. Now we're in a point where it's almost coming down at the same pattern, right? So if you're a smart person, you would buy it at the lows, and as you're going up, we're just holding it. You're holding it. You're holding it, and maybe like right now, you kind of just have your other capital ready, or you could sell it all, hold it again, hold the cash ready for another buy. You wait till it gets lower, like it is now, and it's gonna probably continue to go up. Again, when you're betting on the S&P, the Nasdaq, the Dow Jones, you're betting on the U.S. economy, and it has a significant track record of going up. Yes, there's been times of recessions and pandemics, and oh wait, the housing market crash, the 2020, the pandemic, C word, all these are things that happen into the economy, which are fundamental, you know. So when we talk about rate hikes, when we talk about wars, when we have these are all fundamental, because these are not gonna happen overnight. These are gonna be long term plays, guys. And I want to emphasize, because this is not financial advice. This is what we know. This is what we know. So again, if you're gonna be very smart with your money, be smart and buy at the lows, right? So again, I'm gonna keep this stream a little bit short. We're just gonna talk about a couple articles today. Yeah. Let's see what Alexandra, and shout out to Alexander Simonova, who's a reporter for Yahoo Finance. Shout out to her, man. She really putting this work. All right, let me see, cause I was. All right, so start from the top. U.S. home prices climbed to another record high in April as inflation continued to run hot across the housing market in the spring. So right now we're in spring. Told you guys what the people. Due to the whole I'll call it migration, because a lot of people are moving from New York to come to Connecticut, or move from New York to go to Florida. People are just moving away from these epicenters of C word. And the best thing about that is that it's good for the real estate guys. It's good for the real estate brokers, because they're making the commissions, right? But guess what now? It's bad for someone who is willing to buy at a relatively cheaper price. And it's bad for someone who wants to get a loan at a relatively cheaper rate. I'm going to say that again. It's good for those who want to make in the commissions, the salespersons, the real estate salespersons, the real estate brokers, because you have volume or a lot of transactions going on. So those transactions cause commissions. The attorneys get their cut. The inspectors get their cut. The appraisal guys get their cut. The loan officers get their cut. It's good. It's good for them. Kid you not. It's not a bad thing. It's all about your perspective. But guess what though? For those who want to buy these houses at a relatively cheaper price, at a relatively cheap rate, a lending rate, we need that demand to go down. As demand goes down, the prices of goods goes down, because not everyone wants to buy it, so they have to make a more attractive selling point. So if things are cheaper, if you have a nice, let's say, intrinsic value, it's worth $3 million, sales price, or should I say the asking price, is $500,000, you want a bargain. You feel like it's a bargain, right? So now on top of that, now let's say the rate now on that $3 million intrinsic value house which is the asking price is just a half a million. Let's say you're getting a 1% rate on that $500,000 loan, or whatever, minus the down payment, whatever you're lending, just to one, it's 1% as opposed to what it is right now. What, 3.25, maybe higher, depending on which bank or credit union lender you're going to. So it's very vital to just understand that the times that we're in, and that the prices of a house hit another record high in April, as inflation's continue to continue running hot across the housing market in spring. So best believe, guys, the feds, they're taking note of these transactions, these sales. They're not gonna stop it. They're just gonna try to dismay, control it with the rates. Let's continue. The latest S&P CoreLogic CareShare Index released Tuesday put an annual increase in the cost of home at 20% in April, down slightly from prior months, upward revised up from 20.6. All right, that's not really significant information in my opinion. The pace of increases slowed marginally for the first time since November. It in a potential sign home prices may begin to cool, but many cities across the country continue to see prices soar as at a quickened pace because probably more people are moving into those places. April 2, 2022 showed initial, although inconsistent, sign of deceleration in the growth rate of house prices. Craig L., managing director of S&P DJ Dow Jones, said in a statement, "We can continue to observe very broad strength in the housing market as all 20 cities notched double-digit price increases for 12 months ended in April. April's price increase ranked in the top quintile of historical experience for every city, and in the top decile for 19 of them." So that's pretty significant. So that really tells that the prices are still going up. It's been going up for the past 12 months, and who knows? It might slow down. It might not. Again, if and again, take a step back, take it to a different perspective. If you're someone who is in a high demand of a property, and you're willing to pay whatever rate, you're willing to pay whatever selling price, you're willing to take the pay for that premium, hey, it will sell. And what would that cause? Other housing and prices and things to go up as well. It's just the name of the game. Let's probably read one more section. That's pretty much it. All right, so again, shouts to Alexandra with that amazing article. As always, putting in that work. All right, so next we got inflation will probably fall, but it won't be the Fed's doing. Morning brief. Shouts to Emily McCormick, another Yahoo Finance reporter. Okay, so today, she writes, the Federal Reserve is working hard to bring down inflation, rising interest rates the fastest paced in 30 years. So it's been this rate now that has been going on. This has been going so fast that the last time they did this was before I was born. Insane. Recently, some analysis have begun to explore the idea that inflation may be moderate in the coming months. So that means that they're kind of tapering down, kind of in the control of it, but doesn't mean they're in full control. No, it's the momentum is slowing down. I tend to notice too, gas prices kind of coming down a little bit. You used to almost hit $5. It's kind of like at the 48, 47 range. 47. I mean, $4.70 range. But this decline likely won't be due to the Powell Fed. It increasingly looks like the markets mistook the bullwhip effect of supply chains, including foods, for the sector. Inflation, Tomley, Fudstret's head of research, write in a note Sunday. And for those of you who don't know, The bull the bullwhip effect describes roughly the tendency of businesses to over or underestimate the amount of inventory they will need relative to customer demand, resulting in a volatility of orders across the supply chain. So basically, a lot of times when you're a retailer, let's say you're a Target, you generally have enough supply to last you for, let's say, 2 weeks before the next order comes in. You really want to have a circulation of supply so you can really sell the stuff out that's in there and make space for the new stuff that's coming in. You do not. So a lot of times where it says you're overdoing it, that means you buy too much. Now you can't order as much. That decreases the supply coming in, right? Volatility. Whereas if you order not enough and the shelves are empty, people want to buy some more whatever clothes, then you're gonna be buying more just to overcompensate for it. So again, this is very key, guys. This is very, very important. So this is probably the last one, just to wrap this whole video up. Because again, guys, we're at the 21-minute mark. In case, in the case of the past year, retailers overestimated, leading them to broadly overorder from wholesalers, who then in turn overordered from their own suppliers, leading in aggregate to a major mismatch between customers' actual demand and inventory on hand. That is pivotal, guys. That is so pivotal to just understand. You got to think of the supply chain. Let's think of it like a McDonald's, right? Just to keep things simple. Let's say on average, there's 5 people a day coming and ordering a burger, right? So as a manager would, she would only order enough burgers a week to satisfy those customers every single day, right? And then summertime comes around. You don't have 5 coming, you have 10 coming in every single day. So the customers need the food. And the fact that you're not serving those other 5 customers, guess what, guys? That's the opportunity cost. That's money lost. And they're going to go to the BK. Right? So, as a productive, proactive, intelligent manager, they would then order, let's say, who knows, she's not very, key to, everyday thing, and it's summertime and it fluctuates. So she's going to over order. So now she's gonna order 20 burgers for the 10 customers that come in every single day. Now she has an oversupply. So now because she's ordering the 10 from her, let's say where the patties are being made, the farm or the slaughterhouse, they have to bring in that 1 cow just to make the 5 patties. Now you have to bring 2 cows or 3 cows just to supply as much the hamburgers to be made for the McDonald's, to so on and so forth. And it goes down the chain line, guys. Those cows need to be fed, so they're gonna order more food just to make more cows, and so on and so forth. It's a whole collateral effect, guys. So you have to really think how a lot of these sectors, they're connected in a sense. So as one goes up, another goes down. It all affects each other. So with that being said, let's continue. The bloated inventory levels at Walmart, Target, which I just mentioned, Gap, and other retailers this past earnings season served a recent examples of how this effect played out in real time. So this is just like a perfect example how the supply chain may bring down the inflation in a sense, as to where people are ordering too much, they're ordering less, so they're gonna start finding a balance, to where they need to keep prices at a relatively good range. Because if they're too high, no one's really gonna buy, and if they're too high, there's gonna be less customers, so there has to be less clothes in the stores. If there's less clothes in the stores, then they can bring the prices down a little bit because they don't need as much clothes, which could bring the price to be more attractive to the consumer. It's a lot of we're talking a lot today, man. Oh my god. Yeah, like I always say, guys, just keep in mind what's going on. Be very proactive. Use a noodle. And again, if you want that one-on-one coaching, if you need the signal service or crypto account management, shoot me a comment in this comment section. Shoot me an email. I'll reach out to you, or you can reach out to me. Again, my email is stuart.levon@gmail.com. You could reach me there. But anyways, guys, just to end the video. On your way out, make sure you like, comment, subscribe, and guess what? I'll see you next video. Peace.